Alrighty, welcome back everybody to another market day. I'm your designated inquirer. My name is Axel and today is 9/11/2020. Quick moment of silence for those that passed. Seems like forever ago now. But what was back then an attack on the United States, it was an attack on what they believe to be our financial markets, but more than that, on the people of the United States. Those people that did lose their lives, those that died protecting us, those that were needlessly hurt, we will remember them always. So I just wanted to take a moment to remember them, to honor them as best as we can, and pay them homage because, well, they deserve it. And keeping with what we set out to do from that day, which was to live our lives to the best of our ability and to continue being a great people, do what we can with what we have, and press forward. So let's do that together. Today, the Nasdaq dropped about a whole percentage point. It basically went and revisited the lows of Tuesday, and we'll go over a couple numbers here, but first we're going to be taking a look at Tesla, from its high of 538.75 to today is down 31%, or 30.98%. Okay, from the bottom, the very bottom, which was achieved Tuesday after hours, it had gone down 42 or 43%, 42.94%. So from here to there, add another little drawing here, we can see that we are up 20%. Okay. But on the daily, let's take a look at the daily fast in terms of volume. And from the high volume, the highest volume right here, we're going to draw another line real quick to just check and see what sort of downtrend we have in terms of volume. Okay, so first, I'm going to go ahead and we're going to increase this. That doesn't want to increase, that's fine. We're going to do that. Okay, I go back to this high right here. I'm going to go ahead and draw a line, because what we have here is interesting. We have a decline of about 51%. We're still not at 72%, which would be about here. Okay, we're still not there yet, so we still have some room to go in terms of the downside. What we do have today, though, is decreasing volume, but to the downside. So partially what we may have is move to the upside. If we do see a continuation of downward volume like we had here, what we may see is a continuation to the upside for now until we have either confirmation with volume and or not, and then we move back down to the downside. In terms of still what Tesla is valued at, it is still oversold on the monthly. Still, it's moved down considerably on the weekly. It is on the daily, rather. It has moved down just barely. Has finally just moved down from the weekly. On the 4-hour, we went and we touched oversold. Now it does look here like we may be going back to turn back over on the momentum side. Go up here, we can start, there we go. Now you guys can see we may be turning back over on the momentum side to the downside. So from that point of view, from a momentum point of view, we still have some downward momentum to extinguish. We go to the 2 hour here, same thing is going on. We did not have a confirmation of the down signal. We have not turned over yet, but we did get very close. Now let's take a look at NASDAQ. All right, for NASDAQ, here we have the decrease that we were talking about here. Let's go to the 5 minutes to get a better view of what was going on. Now, the interesting part about the NASDAQ today is that we moved slightly up from this bottom portion, but overall we moved down. But at the same time that we moved down, we also saw a decrease in the VIX, because today we saw a drop of about 1%, but on the VIX, what did we see? We also saw a drop. What was that drop today on the VIX? Today on the VIX, if it shows us, it was down about 10%. Down about 10%, which is pretty impressive. It's really hard to conclude a percentage-based move and correlate it to a NASDAQ-based move. But the very interesting part is that we did move down lower. At the same time, the NASDAQ moved lower, along with almost every other indice. There wasn't really an index that was higher except for the Dow, which jumped up 0.35%, and not even the Russell. Not even the Russell was able to eke out a positive move. Gold was down 0.82%, and Bitcoin was barely up 0.34%. It went up 35 points throughout the course of the day. So why is this the case? Why did the VIX not help the NASDAQ increase value over the day? Now that probably that award goes to the bonds. There we go, bonds. The bonds, on the other hand, had the majority of say in whether or not the market went up and or down today, because they stayed relatively elevated. Now, some telly would have you think that bonds had a great day, but I think they had a great day because they went up in value and the yield went down. But as far as yield is concerned, it had a terrible day because it was more or less, it stayed depressed, right? And so there was relatively little movement as far as an increase and or decrease to the monetary supply active in the market, right? So there were less people holding on to loose cash, and they were basically trading a fair amount of the same amount of money. So that's why sometimes we saw a VIX dropping, but no real power behind the NASDAQ being able to move to the upside, because bonds were basically high. Bond prices were high and that the yield was low. Now, what does this tell us? It tells us a couple things. That momentum is on our side, one. Bonds are on our side, two. The VIX is not necessarily on our side, okay? So one out of the three is not necessarily on our side. So what is the possibility? More than likely, what would have happened today, probably what I should have seen happening, is that we probably would have been chasing and correlating around the point of control, which is partially what happened with Tesla. Look here, it basically hugged the point of control on the monthly scale. If we take a look at Apple, let's see if they did the same thing. They did not do the same thing. Let's take a look at the weekly, load steady set weekly. Point of control is still up there. Wow, Apple had a terrible day. Take a look at the daily. Day, it basically held about its point of control. Now why shift around? Why make it work? Well, the point of control for around TLT here for the day was also about the point of control. Now, the fact that it coincided with a monthly also point of control is kind of irrelevant, but it did manage to find its way there. So we've got a few options for next week if it wants to continue higher. Because here, in terms of volume, what we do see is that there are some options here for us to be visiting higher points in terms of higher points in bond price, which means further lower yield, which means a further declining equity market. And if we zoom out here, let's go to the day. Well, the monthlies here, compared to the last 6 months or so, or the last few months up until March, what we do see here is that we're kind of in line with this overall point of control. If I change this here, let's go ahead and edit this. Let's see if I can change this. Let's see. Bar. Let's go to like 50 bars. Buy. There we go. That's probably a better measure here. So from, yes, all right, good. All right, so what we've seen here is the 11th. What we see here is that there is still a coalescing around basically the central point of control. There hasn't been a whole lot of movement away from it. What can we attribute this to? Probably the Fed. Now, we know what it can get to at points of crisis, probably, and what we can hope to visit. But there are still some somewhat higher options in terms of where we can visit and the way to get there, in terms of points of resistance along the way, points of support, etc. Does this mean that we've got a straight shot into the 180 territory? No, does not mean that whatsoever. But do we have the conditions by which to get there? That maybe, because we still have no stimulus, so we don't have any method to actively increase inflation. There is no we know that the Fed is not stopping quantitative easing, so they're going to keep applying pressure to keep rates low, which in turn is going to affect bonds. So without any of those things, and that they keep reiterating, and now today they've actually said that they're going to be keeping rates low up until 2022. So for a full 2 years, a little more than 2 years, the end of 2022 is more than 2 years, almost 3 years. They're going to be keeping interest rates low. That is a tremendous amount of quantitative easing and long-term pressure for everybody, expecting basically for bonds to drop in price and for yields to increase over that period of time. They're gonna be rudely awakened at one point or another. Their calls on yield are going to run out. Their puts on the price of bonds is going to run out, and they're going to be stuck holding a bag for a entire portion of people that are going to be able to say you're probably going to be able to sell puts on bonds almost reliably for the next 2 years plus. That's kind of what it tells me, because there's gonna be consistent pressure on bonds up until we get some sort of inflation, which is not gonna happen from the Fed. If we're gonna get any sort of inflation, it's gonna be from Congress and probably the administration, be it who comes in this November. if it's from a Biden administration, it may take the form of infrastructure bill, a bunch of other things that we have yet to see. But that's a big but, right? But if they don't do anything, and if stimulus is more or less controlled, timid, or whatnot, what we are going to be seeing, or with every injection of stimulus, is not constant and overreaching or extreme in any measure. What we are going to be seeing is a constant pressure to move to these levels generally. So whether they end up higher, end up shooting higher, or they find a balance a little bit higher, that is probably going to be the case for the next 3 years. So that's what I see for now. That has been your market day. And until next time, hope you guys stay safe, stay healthy, and take care. Bye.